Imagine this. A company gets that landmark FDA approval for its big new drug, right?
Yeah, the moment they've been working towards for years.
Exactly. And then the stock price tanks.
Yeah.
Drops sharply.
Oof. Happens sometimes. Sell the news.
Right. But here's the twist. Our analysis suggests its real value, its intrinsic value, could be, well, double what it's trading at now.
Ah, okay. So a disconnect.
A big one. We're talking Tonix Pharmaceuticals, trading around $36, maybe worth $55 to $85. But, and it's a huge but, getting there. It means navigating some truly monumental risks. Welcome to the deep dive. We dive into all the info, pull out the important bits, and help you get up to speed fast. Today, it's Tonix Pharmaceuticals, a biopharma company at a really pivotal moment.
Absolutely pivotal. They just got the green light from the FDA for Tonmya, their main drug for fibromyalgia. Big win.
Huge win.
But now the question is, can they actually switch gears, go from being an R&D shop to a company that actually sells things and makes money?
That's the core of it.
Yeah. So our mission today is to really dissect the company, look at the management, scrutinize the financials, understand the market, and figure out, is this a solid long-term investment or just a massive gamble?
We've split this deep dive into two parts to make it clear. First, we'll unpack the business itself, the leadership, the financial health.
The fundamentals.
Exactly. Then we'll switch to how the market feels, who owns the stock, and critically, those big risks we mentioned. Ready to jump in?
Let's do it.
Okay, let's start by really getting under the hood. What is Tonix Pharmaceuticals? Chapter 1. Deconstructing the Tonix business model.
Okay, so Tonix is really at this inflection point. They're trying to morph from just R&D, labs and trials, into a fully integrated commercial company. Their whole model is about finding, developing, and then selling therapies and vaccines. They target some big areas: CNS disorders, immunology, infectious diseases, rare diseases too.
So where's the money coming from right now? Have they started selling anything yet?
Well, historically, nothing. Zero product revenue. They just raised capital, sold stock.
Standard biotech playbook pre-approval.
Exactly. But that changed a bit in mid-2023. They made a pretty clever move, actually. They acquired 2 migraine treatments already on the market: Zembrace SymTouch and Tosymra.
Ah, so some revenues started trickling in.
A trickle, yeah. Modest. About $7.8 million in 2023, maybe $10.1 million in 2024. But the really interesting part, it wasn't just about the cash.
No.
No. It was more like a strategic practice run. A dress rehearsal, you could say.
Ah, to build out the sales team, the logistics, all that commercial stuff.
Precisely, to get their commercial infrastructure ready for the main event.
And the main event, the one everyone's watching, that's Tonmya.
Absolutely. Tonmya got the FDA nod on August 15th, 2025 for fibromyalgia. They're planning the launch for Q4 2025.
And this is a big deal because
it's huge. It's the first new FDA-approved drug for fibromyalgia in over 16 years. 16.
Wow. That's a long time.
It really is. And it works differently. It targets that non-restorative sleep problem, which is a core part of fibromyalgia that older drugs don't really address well. It's a unique angle.
Okay, so Tonmya is front and center. What else is in the works? Any other potential winners down the line?
Yeah, they do have a pretty broad pipeline for the longer term. Some notable ones are TNX 1500. That's for organ transplant rejection and autoimmune diseases.
Okay.
Then there's TNX 801, which could be a safer vaccine for mpox and smallpox. And TNX 1300, this one's interesting. It has breakthrough therapy designation from the FDA.
What's that for?
Life-threatening cocaine intoxication.
Yeah.
And they also have TNX 1900 for chronic migraine. So there's depth there.
Got it. So with Tonmya approved and this pipeline, where do they actually sit in the market? How big are they?
Still small, definitely small cap. Market cap around $302 million. With Tonmya approved, they're now technically an emerging commercial stage company.
Right.
But, emerging is the key word. Their scale is tiny compared to the competition, especially in CNS. Well, the plan is to launch Tonmya with about 80 sales reps. 80.
80 reps versus who?
Versus the giants? Pfizer, Eli Lilly, AbbVie. The companies marketing the generic versions of the old drugs, they have thousands of reps.
Thousands. Okay, so Tonix is like a tiny speedboat trying to navigate between massive battleships.
That's a pretty good analogy, yeah. They're a niche player going up against established titans. It's David and Goliath, really.
So what's their pitch? What's the core value proposition that makes them think they can compete?
Innovation, basically. Developing new solutions for tough diseases where patients don't have great options. For Tonmya specifically, it's a novel, non-opioid pain reliever that helps fibromyalgia patients by improving sleep quality.
Which is different.
Very different. It gives doctors a new tool and patients hope. For the rest of the pipeline, it's about using their unique platforms to tackle other tricky public health problems.
Okay, let's talk market size. Fibromyalgia. How big is that opportunity?
It's substantial. The global market was valued around $3.1 billion back in 2022, and it's projected to grow to about $4.6 billion by 2032. That's a CAGR, compound annual growth rate, of about 4%.
What's driving that growth?
Few things. More people being diagnosed, better awareness, the population aging, plus ongoing R&D. North America is the biggest piece of that pie.
And you mentioned something earlier, long COVID potentially expanding this market.
Yes, that's a really interesting angle. There's growing evidence linking long COVID to symptoms that look a lot like fibromyalgia. So you might have a whole new group of patients who could potentially benefit from Tonmya. It could mean those pre-pandemic market forecasts are actually too low.
Okay, potential for a bigger market.
Right.
But what about the competition within that market? You mentioned generics.
That's the main challenge. The market's been dominated for years by Lyrica, Cymbalta, and Savella.
Right, I've heard of those.
Yeah, big names. But now they're all off patent. Generic versions are everywhere, and they're cheap.
So Tonmya comes in as the new, likely more expensive option.
Exactly. That generic competition means huge pricing pressure. And it makes getting good formulary access, getting insurance companies to actually cover the drug, a massive hurdle.
They really have to prove Tonmya is worth the extra cost.
Absolutely.
Wow.
They need a knockout story about how it's different, how it works better to justify that premium price.
What about the regulators? Is the FDA pathway tricky for fibromyalgia?
It's actually pretty well trodden. The FDA had approved those 3 other drugs before. Tonix navigated it successfully, got Tonmya approved based on 2 positive phase 3 trials.
Okay.
And getting that fast-track designation was a good sign. Basically means the FDA agrees that fibromyalgia still needs better treatments, even with the generics out there.
And barriers to entry for anyone else wanting to develop a CNS drug?
Extremely high. You've got the science hurdles, like the blood-brain barrier. You need massive amounts of capital, hundreds of millions, even over $1 billion, plus complex regulations, and you absolutely need strong patents to protect your invention. It's tough.
Yeah. So given all that, what are Tonix's actual competitive advantages if they don't have brand strength or cost advantages yet?
Right, those are minimal now. And switching costs for patients are low, but their key assets are, first, their patented tech for Tonmya. It's a sublingual formulation under the tongue.
Why is that important?
Faster absorption, potentially fewer side effects, and that's protected by patents until at least 2034.
Okay, that's significant.
It is. Plus, they have that first mover advantage, first new drug in over 16 years. And they've got some vertical integration with their own R&D and manufacturing facilities, which gives them more control.
Okay, that gives us a good picture of the business itself. Now let's talk about the people steering the ship. Chapter 2, Management Evaluation.
All right, management. Tonix is led by its co-founder, chairman, and CEO, Dr. Seth Lederman. He's a physician-scientist, background in molecular immunology, actually co-discovered the CD40 ligand.
Impressive science credentials. Any business success before?
Yes. He had a previous win with a company called Tonix Pharmaceuticals. They developed an oncology drug, Fusilev, which got acquired and was successfully marketed.
Okay, so he's seen a drug through development and an exit, but launching a major commercial operation from scratch, like they need to do at Tonmya, it's different from an asset sale, right? Does he have that kind of experience?
That's the key question, isn't it? And you're right, the Targin exit wasn't a full commercial launch build-out.
So how are they addressing that potential gap?
They seem aware of it. They've made some key hires specifically to boost their commercial side. A new VP of marketing, a new VP of medical affairs, both with decades of experience.
Okay.
And maybe most importantly, they brought Jim Hunter onto the board of directors in June 2025. He's a real commercial veteran, came from Novartis.
So they've brought in reinforcements.
They have. But ultimately, the Tonmya launch is the big test. It will show whether this newly assembled team can actually pull it off, execute.
How are they on transparency and, ethical reputation? Any red flags?
They seem pretty standard for a public biotech. Lots of communication, press releases, investor presentations, SEC filings. We didn't find any signs of major ethical issues or controversies. Seems clean.
Good. Now, capital allocation. We know they need money for R&D and launch. How have they been spending it historically?
mostly on R&D, as you'd expect, advancing that pipeline. They've also put capital into building infrastructure like those R&D and manufacturing facilities we mentioned, vertical integration.
And the M&A, like the migraine drugs.
That seems strategic, yeah. Focus on building those commercial muscles, not just buying revenue. Seemed pretty targeted.
Okay, but what about share buybacks? You mentioned those earlier. For a company burning cash and selling stock, buying back shares seems odd.
It really does. It's unusual and, frankly, a bit contradictory. They authorized buybacks $12.5 million in early 2023, another $10 million in September 2024.
While needing cash for trials and launch.
Exactly. For a long-term investor, using precious cash for buybacks when you're unprofitable and reliant on equity raises, it definitely raises questions about capital allocation discipline. It's a concern. And related to that, their return on invested capital, ROIC basically, how well they use the money they invest.
Right.
It's been deeply negative, around minus 69% for Q1 2025. Again, expected for a pre-revenue company, but it underscores how vital Tonmya is. Getting to positive cash flow from Tonmya is the critical factor for creating future value.
All right, let's dig even deeper into those financials. Chapter 3, Financial Analysis.
Okay, numbers. As of mid-August 2025, Tonix's market cap was sitting around $302.4 million.
And revenue trends. We know it's recent, just from those migraine drugs.
Very recent. Zero revenue from 2020 to 2022. Then that's $7.8 million in 2023, $10.1 million in 2024. The real growth, the significant ramp-up, is all expected to start with Tonmya in Q4 2025. That's the story.
And profits, or rather, lack thereof.
Oh yeah, definitely lack thereof. Margins are deeply negative across the board. Gross margin was about 23% in 2024, but actually went negative in Q2 2025 for the acquired drugs.
Negative gross margin. Wow.
Yeah. And operating and net margins, way down. For the last 12 months, the net profit margin was something like minus 828%, just hemorrhaging cash.
Which leads us to free cash flow. Still burning through it.
Absolutely. Long history of cash burn to fund everything. Net cash used in operations was about $61 million in 2024, similar for the trailing 12 months.
So Tonmya has to work to turn that around.
It's do or die for cash flow, basically. They've consistently posted big net losses every year. Typical pre-approval biotech stuff, but the clock is ticking now. No history of positive earnings at all.
What about the balance sheet? Any good news there? Debt.
Actually, yes, this is a major strength. They're effectively debt-free. Debt-to-equity ratio is 0.
Okay, that's huge. Gives them flexibility.
Massive flexibility. Really important heading into a costly launch.
And their current ratio, short-term health.
Also very strong. Current ratio was 7.51 as of June 30th, 2025. That means they have plenty of liquid assets to cover short-term bills, critical for funding the launch without immediate panic. And just to confirm again, no dividend. Standard for this kind of company.
Okay, so negative earnings, negative cash flow, recent revenue.
Yeah.
How on earth do you value a company like this? The usual PE ratio is useless.
Completely useless, yeah. It's negative. So you look at price to sales, PS,
Right.
and based on their current tiny revenue and market cap, their PS is sky high, around 32.
32. How does that compare to, say, Big Pharma?
It's way out there. Pfizer's around 2.3. Eli Lilly, which is a growth darling, is around 12.1. AbbVie about 6.3.
Right, so Tonix at 32.
It screams story stock. The current valuation has almost nothing to do with current sales. It's purely built on hope and high expectations for Tonmya's future revenue.
So how do we estimate what it could be worth if Tonmya succeeds? The intrinsic value.
That's where the discounted cash flow, or DCF model, comes in. You project out the future free cash flows you think Tonmya can generate, then discount them back to today's value.
Because $1 tomorrow is worth less than $1 today.
Exactly. The value of any business ultimately is the present value of the cash it'll spit out over its life. So running an educational DCF based on Tonmya being successful, it suggests a potential intrinsic value range of $55 to $85 per share.
55 to 85. That's potentially a lot higher than the current $36, a potential 50% to 135% upside. But you're saying that value only exists if they nail the launch.
100%. Every bit of that potential value is riding on future uncertain events. It's all about successful commercialization. It's not about the science anymore. The FDA validated that. It's about selling the drug.
What are the key levers in that DCF model? What assumptions drive that $55, $85 range?
Okay, key assumptions. We modeled peak annual sales for Tonmya between $300 million and $500 million. That's grabbing about 6% to 11% of that $4.6 billion fibromyalgia market by 2032.
Is that realistic?
It's plausible for a successful launch of a novel drug, but definitely not guaranteed against generics. We assumed a standard 8 years to reach that peak, a conservative long-term growth rate of 2.5% after that, and crucially, a high discount rate, or WACC.
Weighted average cost of capital.
Right, we use 13.5%. That's high, reflecting the huge risks, single product launch, small cap biotech volatility, all that uncertainty. And we assumed a mature operating margin of 28%. Change those assumptions, value changes, sometimes dramatically.
Okay, so we have a picture of the business, the team, the financials, and a potential value range if things go right. Let's turn to how the market is actually viewing all this right now. Chapter 4, Market Sentiment.
Well, if you look at Wall Street analysts covering Tonix, the sentiment is overwhelmingly positive. Consensus is a strong buy.
Strong buy. Okay, what are the price targets like?
The average one-year target is pretty tightly clustered between $61.67 and $62.90. That implies, over 70% potential upside from the current price, around 36 cents. Individual forecasts range from $50 up to $73, up to $73.50.
So analysts are bullish. But didn't you say the stock fell after the FDA approval news? How does that square?
It doesn't, really. It highlights that disconnect. The media coverage was positive, focusing on the milestone first new drug in 16-plus years.
Right.
Good news.
Yeah.
But the stock price action, decidedly negative. It peaked near $70 before the decision, was over $51 on approval day, then boom, fell to around $36.
Classic sell news.
Textbook example. It suggests the market had already baked the approval into the price. Now, the market's focus has shifted hard to the risks of the launch, the execution uncertainty. Analysts might be looking more at the potential. The market seems focused on the immediate hurdles.
Let's talk about short interest.
Yeah.
That usually tells a story about market skepticism.
And it tells a big story here. Short interest in TNXP is exceptionally high, somewhere between 13.8% and 16.2% of the publicly traded shares are sold short.
That's a lot.
It's very significant. It represents a large, well-funded group betting against the stock. And the cost to borrow the shares to short them, also very high, 20% to 27%. That shows real conviction from the bears.
So it sets up a real battleground.
Exactly. Highly polarized. If Tonmya's launch goes well, you could see a massive short squeeze as those bears rush to cover. But if it stumbles, the shorts will feel vindicated and the stock could fall further. High stakes.
What about technicals? Moving averages. Where does the price sit relative to trends?
Well, the current price, $36.65, is way below its 50-day simple moving average, which was around $50.43. That points to a bearish short to intermediate term trend.
Okay.
The 200-day average is a bit more mixed depending on the source. Some show it below, some still have the price above it, suggesting the longer-term uptrend from earlier in the year might not be totally broken yet, but mostly it just shows how incredibly volatile this stock is right now.
Okay, market sentiment seems skeptical despite analyst optimism, very polarized. Let's look inside the company now. Who actually owns Tonix? Chapter 5. Ownership structure.
Ownership is interesting. Institutional ownership, the big funds is relatively low, only about 16% of the total shares.
Only 16%.
Yeah.
That seems low for a company post-approval.
It is quite low, but it has been increasing quite a bit recently. The top holders are mainly the huge passive index fund managers. Think BlackRock, Geode Capital, Vanguard, State Street.
So does that mean the smart money is finally getting interested? Or is there another reason for that increase?
Probably another reason. It's more likely just a mechanical effect. Tonix got added to the Russell 2000 and Russell 3000 indexes back in June 2025.
Ah, so the index funds had to buy it whether they liked it or not.
Exactly. They're just tracking the index. What's perhaps more telling is the absence of well-known specialist healthcare or biotech hedge funds among the top holders.
Meaning?
It suggests that a lot of the active specialist smart money might be sitting on the sidelines waiting to see actual proof of commercial success before jumping in. They want to see the sales numbers.
Makes sense. What about insiders? Management, the board, how much skin do they have in the game?
Not a lot, actually. Insider ownership is low, only about 1.69% of the outstanding shares. You'd ideally like to see higher alignment between management's wealth and shareholder outcomes.
But any recent buying or selling by insiders?
There was one notable transaction. The CEO, Seth Lederman, bought 4,000 shares on the open market back in May 2025 at $21.55 per share.
Before the FDA decision.
Right. Now, 4,000 shares isn't a huge amount in the grand scheme, but a CEO putting their own money into the stock right before a major catalyst, that's usually seen as a strong signal of confidence. But the bigger picture here is who owns the rest of the stock.
And who is that?
Mostly retail investors, individuals like you and me. They collectively hold something like 87% of the company.
87%?
Yeah. And that large retail base is a big reason why the stock is so volatile. Price moves can be driven much more by short-term news, social media buzz, momentum trading, rather than just fundamental analysis.
Okay, so low institutional conviction outside of index funds, low insider ownership but a CEO buy, and a huge retail base.
Got it.
Now let's put it all together and really focus on the potential pitfalls. Chapter 6, Risk Assessment.
All right, risks. A SWOT analysis helps frame this. Strengths first. They've got the FDA-approved Tonmya. It's novel, first in 16-plus years. Targets a big market. Strong patents on that sublingual delivery tech. Solid balance sheet, debt-free, lots of cash. Diversified pipeline eventually. And their own R&D and manufacturing. Those are real assets.
Okay, the positives, now the weaknesses. And let's be blunt, what's the Achilles heel here?
The weaknesses are significant. That long history of losing money, burning cash, the big question mark over management's proven ability to execute a large-scale commercial launch. Cash burn is set to accelerate with launch costs, those questionable share buybacks in the past. And the history of diluting shareholders by selling more stock, that's a major weakness cluster.
So the opportunity is huge, but the execution risk and financial history are worrying.
Precisely. Opportunities. Capture a big chunk of that $4.6 billion fibromyalgia market. Maybe even expand it with long COVID. Monetize the pipeline later if Tonmya works. And maybe that short squeeze potential.
And the threats. What could really derail this?
The threats are serious. Fierce competition from cheap generics is number one. Big hurdles getting payers, insurance, to cover Tonmya favorably. The primary risk, just failing at the commercial execution, the launch itself, intense pricing pressure, and the very high likelihood they'll need to sell more stock, diluting existing shareholders if Tonmya's revenue doesn't ramp up fast enough. That's probably the biggest immediate threat.
How do bigger picture things, like the economy, play into this? Inflation, interest rates.
They definitely matter. Persistent inflation running at 2.7% in July 2025 directly hikes up their costs. Manufacturing, salaries for the sales team, marketing, it all gets more expensive.
Which means they burn through cash faster.
Right, potentially pushing them to raise more money sooner. And high interest rates, the Fed funds rate at 4.25% to 4.50%, hurt growth stocks like Tonix disproportionately.
How so?
Higher rates increase that discount rate we use in the DCF models. It makes future cash flows worth less today, so it puts downward pressure on the theoretical intrinsic value.
Got it. Any geopolitical risks, like those new U.S. tariffs?
Yeah, that's another potential headache. In April 2025, the U.S. put a 10% tariff on almost all imports, plus huge tariffs up to 245% on some Chinese goods, including API's active pharmaceutical ingredients.
The raw ingredients for drugs.
Exactly. A lot of APIs used in U.S. drugs come from overseas, including China. So these tariffs, they're going to push up manufacturing costs.
And for a small company like Tonix.
For a small company just starting out, lacking the buying power of big pharma, those higher costs could really squeeze Tonmya's gross margins. Makes it even harder to compete against generics who might have more diverse, maybe cheaper supply chains. It's another pressure point.
Okay, we've covered a lot of ground. Let's try to synthesize all this for the listener. Chapter 7. Conclusion.
So let's sum it up. The bull case, the optimistic view. It's compelling. Tonix climbed the mountain, got FDA approval for Tonmya, first new fibromyalgia drug in ages, novel approach. Good patents lasting until at least 2034. Strong balance sheet, no debt. There's a clear path, if they execute, to build a business generating hundreds of millions in annual revenue. That could totally re-rate the stock and unlock the value in their pipeline, too.
The dream scenario.
The dream scenario. But the bear case, the pessimistic view, is equally powerful and focuses almost entirely on that execution risk.
Can they actually do it?
That's the million-dollar, or rather, multi-million-dollar question. They're trying to instantly become a commercial company with an unproven team, launching straight into a fight with cheap, established generics. That sky-high short interest, that's the market screaming skepticism about their chances.
And the cash burn continues.
It absolutely continues, likely accelerates near term. Their history of losses and dilution looms large. If that Tonmya revenue ramp is slow, they'll almost certainly have to sell more stock, hitting current shareholders. That's the fear.
So bringing you back to valuation,
Yeah.
that $55 to $85 range you calculated.
Right. Our educational DCF analysis points to that intrinsic value range, $55 to $85. But remember, that value is incredibly sensitive to how well the Tonmya launch actually goes. It's not baked in.
So for you listening, considering Tonix trading around $36, what's the bottom line?
The bottom line is, it trades at a significant discount to what it could be worth if the launch is a home run. But the path to that home run is incredibly narrow. It's littered with operational hurdles and market risks.
The bet isn't on the science anymore.
Not at all. The FDA settled that. The bet now is purely on commercial execution. Can this team sell this drug effectively against tough competition and get insurance to pay for it? The huge gap between those bullish analyst targets and the massive short interest, that perfectly captures this extreme risk-reward setup. So TNXP is definitely high risk, high reward. If you have a high tolerance for volatility, if you really believe this new commercial team can thread the needle and execute brilliantly against the odds, then maybe the current price looks like a compelling entry point.
But if you're more conservative,
if you're a more cautious, value-focused investor, the huge uncertainties around market adoption, reimbursement, actually turning a profit, it all suggests maybe waiting. Waiting for some concrete proof, some real sales data showing commercial traction might be the more prudent way to go. Let someone else take the initial launch risk. So, as you think about Tonix Pharmaceuticals, here's something to chew on. We know the science is validated by the FDA, and we know there's a real need in the fibromyalgia market. Does success for a drug like Tonmya hinge more on the skill and agility of this small team trying to outmaneuver giants? Or does it depend more on the sheer, undeniable patient need for something new and innovative in a field that hasn't seen much progress in years? Which force wins out? And that wraps up our deep dive into Tonix Pharmaceuticals. We hope digging through this gave you some valuable perspective and a much clearer picture of this really fascinating company. If you found this useful, hey, do us a favor and hit like and subscribe to the Stock Analytics AI YouTube channel. We've got a membership for just $4.99 a month. Members get priority deep dives on tickers they request. We're actually planning to cover all the S&P 500 stocks over the next few months, and members get first dibs.
yeah, jump the queue.
Exactly. And if you just want a one-off deep dive on a specific stock you're watching, just drop us a super thanks on the video.
And please, always remember, this analysis was generated by an AI system. It's purely for educational purposes. It is not financial advice.
Absolutely. Do your own homework, your own thorough research, or talk to a qualified financial advisor before making any investment decisions. Thanks for joining us for this deep dive. We'll catch you on the next one with more insights.